So our topic is very big, so we can go to our topic. In the last breakfast, we find to how do we can calculate a taxable income, because you have to pay your tax on your taxable income, not your accounting profit. So in last we calculate taxable income. This time we are going to determine corporate tax liability and some loss relief for corporate tax, and we also discuss tax credit, means withholding tax, and foreign tax credit. This withholding tax means only withholding tax in UAE. If you are any withholding tax paid in outside the country, this we deal in foreign tax credit. We can discuss later in details of this topic. This is our agenda for today. So the first topic is corporate tax liability calculation. This is a very simple form of a corporate tax liability. You can start with profit before tax. This is the figure which you take from your income statement. After that, you have to take some adjustment. This adjustment we discussed last time. You have to add some expenses which is not deductible for the corporate tax. But for example, there is a meal and entertainment expense. If you are paying meal and entertainment for your own, for shareholder, it's not allowable 100%. It will be 50%. And if some expenses, for example, if you are taking withdrawal from the business, it's not allowable. So this we already discussed in last express very detailed, and you have to minus some exempt income. One of the main example of exempt income is dividend right now. The local dividend is fully exempt. Foreign dividend is also exempt sometime, but there are some conditions you have to fulfill the condition, then it's exempt. And then you have to calculate after the taxable income, you can minus loss relief. There is some loss relief. The loss relief is only available only the losses which incurred in the tax period when tax is started. Before the tax started, there is no loss relief is available for that losses. That losses is wasted. If you have any loss which incurred during the tax started, because tax is starting in 1st June 2023. If your period is January to December 2024, 1st January 24, 31st December 24, the loss which incurred in this period, this is available for deduction. Before this, loss is not deductible for corporate tax. And the first 375,000 profit with the zero rated, and then above with the 9%, then you can come at taxable liability. After taxable liability, you have to be minus withholding tax, which is paid in UAE. So right now the withholding tax in UAE rate is zero rated, zero. In future, if they give us some rate, then we can see how much is the rate. Right now the withholding tax in UAE is zero. First you have to minus withholding tax paid in UAE, then you have to pay any foreign tax credit relief. If you have any subsidiary in out of the country which is taxable in the Middle East, any tax you paid outside of the country you can deduct from here. So foreign tax credit relief is also available over there. After all the deduction, you can go for this is your taxable liability you have to pay to the FTA after all this adjustment. This is very simple forma to understand, but at the back end it will be a lot of more work is needed for this one. This is the first tax year, so everyone is worrying about to go for a how much is our tax payable. This is order to approach. You can start from the pre-tax profit, which is profit before tax, PBT, we normally say in accounting, in the financial statement. This you can take from your income statement. After that, you have to take by adjustment. All the adjustment that we discussed before. Some expenses are deductible and some expenses are not deductible. So you have to add back. If some expenses are not deductible, you have to add back in your PBT. And if you have some exempt income which you already added in your profit before tax in your income statement, so you can minus that one and then calculate the taxable income. After taxable income, you have to adjust the relief, loss relief, any other relief you have. Then you have to find your corporate tax liability, because first you need to find the taxable income. If you have a taxable income, then you can determine the taxable liability. As I mentioned before, that we cannot pay tax on the profit before tax. Sometimes profit before tax is in negative, but you go to the find your taxable income, it may be you can come a profit before you have a loss. But if you have a profit before income, maybe you can come in a taxable loss income, because you have to determine taxable income and taxable loss for paying to the tax to the authority, because we are not paying tax on the income. So this is normally in the market is a perception that we are going to pay tax on profit. You are not paying tax on the profit, you are paying tax on the taxable income. Then after that, you can compute your corporate tax liability, and then tax credit relief is available. The main two difference, loss relief and tax credit. Loss relief is reduce your income. So if you are after taxable income, you can apply your loss relief. This will reduce your taxable income. And this tax credit, this will reduce your tax liability. this will not reduce your taxable income, because when you find your tax payable, then you can minus your tax credits. So in actually, because tax loss relief is your income reducer, and this tax credit is your tax payable reducer. There's two difference on this one. So this is a loss relief for tax purpose. This is some more detail need to be go over here. In losses, you have 3 articles in the tax: 37, 38, 39. Article 37 says you have to be, if you have a loss, you can carry forward until it cannot be 100% used. So there is no limitation of you can use your loss within 2 years, 3 years, 10 years, and you can carry forward until it cannot be offset. So allowable deduction exceed business tax revenue for period tax losses, offset for income tax subsequent tax period for the same tax. This is that you have to be offset against taxable income for subsequent tax period for the same taxable income, because you have to offset taxable income with the losses. Transfer wholly partially to another taxable business article. The article 27 say you have to be offset on your own income and carry forward. If you have losses remaining, you can carry forward until the subsequent period. But article 38 say you can also give some losses to your other companies. For example, if one company holding other company 75% of the shareholder, he can transfer his losses to other company as well. But the minimum percentage of holding is 75%, not a 50%. Because in accounting, if you are more than 50% of shareholder, this is your subsidiary in accounting. But if you want to transfer your tax loss, should be holding of 75% of your, directly or indirectly. Because some company, maybe I hold one company 100% and another company hold 75% of that company. So indirectly, I am holding 75% of that company. If I have a loss, I can transfer my loss to over there. If he has a loss, he can also transfer to us. Some losses are not allowable losses incurred before the commencement of CT. If you have any loss which incurred before the commencement, for example, the first tax period is 1st January 2024 to 31st December 2024. If you have a loss in 2023, this is not allowable loss for you. This is forfeited, because they say the loss which are incurred after starting the tax period, this loss is only allowable for you. The second point, incurred before a person become a taxable person for CT purpose. Sometimes a person is not taxable person for CT purpose. Maybe he is exempt before, he don't have any income. Some exempt person become a taxable after that some period. So if your losses will be allowed when you become a taxable person for CT purpose. If you are not taxable person, you cannot allow to get a losses of that one. Incurred on asset or activity for which the income is exempt or otherwise not taken into account for CT. Any person who is doing activity which is exempt income, for example, if one company holding only dividend or the only shareholder and share of the other company, the right now his income is exempt, getting this exempt income only, and after that from the exempt income he has some losses. If you can calculate the taxable losses, then he has some tax losses, so he cannot use tax losses because the income which right now he is earning is exempt from the CT point of view. Losses can carry forward. A tax loss from one tax period may be carried forward and can be offset against taxable income in the subsequent tax periods. So the losses you have, you can carry forward to the subsequent tax period. There is no limitation, because in market normally there is a gap of interest capping rule. There is one interest capping rule you can carry forward until for the next 10 years. But the losses, there is no rule for 10 years. You can carry forward until subsequent periods. Relief is claimed against the taxable income before loss relief, after all adjustment including taxable expenditure and unrealized gain and losses. So relief is available, that I had mentioned before, that this relief is available for taxable income. This relief is not reduce your tax liability. This relief will reduce your taxable income. When you calculate taxable income, after that you can apply this relief. This will reduce your taxable income. Then you apply for 0 rated and 9% of with the rate, then this will be a taxable liability. Carry forward, this should be a final adjustment for you. After that, there is no adjustment required. Then you have to calculate your taxable liability. Restriction, there is a gap. Maximum of 75% of taxable income for each tax period of or any other percentage of specified by. If I have a loss of 1 million in 2024 and if I have an income in 2025, I can maximum limit of loss can I adjust in 2025 is a 75% of that taxable income in 2025. I cannot go for more than 75% because authorities say you have one period you are a loss, then next period you are in a profit, you can adjust your loss with 75% gap, but you have to pay something to us as well. So this is your taxable income. So maximum loss you can adjust is a 75% limitation. This limitation will be in all Article 37, 38 and 39. So this is that if you are offsetting your loss in next year, there is a limitation of 75%. You cannot take more than 75%. This is a maximum limitation which the law says. There is a limitation that you can only use of lower of the available loss brought forward or 75% of the taxable income for the period in which the loss is being used. So this means that you can only use lower of the loss which you have remaining or 75%. If 75% is higher, you can use 75%. If loss already less than 75%, you can use 100% your loss. If loss is more than 75% of your taxable income, then you can maximum 75% of your taxable income, not more than 75%. Unused tax losses can be carried forward indefinitely. Yes, I already mentioned that you can use unused losses unlimited period. You cannot, there is no limitation for the use. You can use these losses within 5 years, 10 years, 3 years, 2 years. There is no limitation for it. You can use until indefinite time period of. If you have a loss, you can use until period. I know in market, a lot of people buy some companies in 2023 which are loss making. They think that they can use that loss 2024 when they started his tax period. But in the law says you cannot use that losses in 2024. If you have a loss in 2023, it's wasted. There is no carry forward for that losses as well. So you can only use the loss which is available in your tax period. The third Article 39. At least 50% shareholding must remain unchanged for the loss incurred period of the offset. As I mentioned, a lot of people buy the company. If you are buying the company during the tax period, for that company, the loss relief is not available for you. You have to be at least 50% shareholder must unchanged from the loss incurred. In that period, you have to, from the start of the year, you have to 50 owner of that company. If you are buying during the year, this loss relief is not available for you for this year. The next year, maybe it's available for that company because of the Article 38 is offsetting within the 75% shareholding of the qualifying group. But if you are buying something, you have to retain 50% shareholding, and ownership exceeds 50% changes, the company must continue. If ownership change, you cannot allow to change your business activity, nature of your business. You can also continue the same business nature. If you are changing the nature of the business, in the next period is also not allowable. So, and some people buy a company who's doing a cafeteria, and after buying a cafeteria, he think I will go to a consultancy. So you have to go for a cafeteria. You cannot change the nature of the business, change the activity of the business. This is the transfer condition. Transfer taxable income of the relevant tax period is reduced. If I transfer my loss by a company, then his taxable income will be reduced. His not tax loss cannot exceed 75% of the transferee taxable income. If I am transferring my loss to another company, then again a limitation of 75%, because 75% limitation in all article 37, 38, 39. If I am owner of another company, I means I also a company. Individual person cannot transfer his loss to the company. If I am an individual, I have a sole establishment, I cannot transfer my sole establishment loss to any company. I means I am a company, juridical person. A juridical person can transfer his loss to another juridical person which he holds 75% share ownership. If I hold a 75% ownership in another company, I can transfer my loss to that company, but I can transfer my 75% of the loss of taxable income of that person. If another company has an income of 1 million, I have a taxable loss for 1 million. I can only transfer 750,000 dirham. I cannot go more than this one. I can only give him a 75% cap of my loss to that company. There is both are a juridical person, as I told. Both are a UAE resident company. There is a condition. Both are a juridical person. Both are UAE resident company. If I have a branch outside the country, he cannot transfer his loss to me. My loss, if I need to transfer my loss, both company is in UAE. So there is no outside of the UAE company can transfer my loss. Common ownership exists if either person hold at least 70% direct or indirect ownership in the other, or a third party hold in both. This means that you have to be hold 75% shareholder during that full tax period. If you are buying holding during the tax period, is not allowable. This loss can be used by the company which loss he has. For example, if I buy a company, I am a juridical person, I buy a company during the tax year, that company is in loss. So I cannot use that company loss to my taxable income. That company use the losses by his own in future taxable income. But in the next period, this tax period, if I holding that company again in the next quarter, then the losses of next year I can use, but the previous year I cannot use, because this losses belong to that company. This losses not belong to me. This is some technical point that you have to understand, because if I buy a company that is in loss, I am a juridical person, and that loss is belong to that company, not mine. If I continue that company shareholder, if we also get a loss in 2025, I can use that loss, but the 2024 loss I cannot use, because this loss is property of that company. If that company have a taxable income in future, so they can use that his loss, previous year 2024 losses in his taxable income. He cannot give that losses to me. So common ownership must present for the loss income until offset. Common ownership must be due. None of the person are exempt person. None of the person are qualified free zone person. If you are a qualified free zone person, you cannot take losses from other company. Same financial year are using, same accounting standard. In UAE accounting standard is IFRS, so you have to be fulfill all these conditions, then you can take losses from other company as well. Tax credit. This is a tax credit which we discuss, withholding tax and foreign tax credit. This will reduce your taxable liability. Tax losses will reduce your taxable income. This will reduce your taxable liability. So you have to be first deduct withholding tax, then you can deduct foreign tax credit relief. Right now, withholding tax in UAE is zero rated, so there is no withholding tax. Withholding tax payment such as interest, dividend, and royalty to non-resident in many jurisdictions. I know in Saudi the withholding tax is 15%. In Middle East right now the withholding tax is 0%. So if you have a non-resident person, for example, you have a German resident, you have some property over here, and you are getting some income from here. So if I am a company, I am giving you the income of your property, then I have to withhold some amount which the authority give you a rate. Then that withhold which I withheld to my, this is basically the property of FTA, because I am just withholding in my system. Then I have to pay to the authority in the future. This right now the withholding tax is zero rated. So withholding tax is held under Article 45 of city law. The main point of withholding tax, you can only use withholding tax in the period which you paid. You cannot carry forward or carry back. In losses relief, I said you can carry forward, but in here you cannot carry forward. This is the relief only available in which period you paid. If you are paid in 2024, you can only use in 2024. You are not carry forward in future period. Withholding tax is withheld under Article 45 of city law on state source income of non-resident. It is recoverable in Article 46. If some non-resident person has a coming income from the UAE, then he think that if I am going to pay already withholding tax, so why should I not go and build a company over there? If that guy come on the UAE and build a company, then that withholding tax he paid already, he can deduct from his tax liability. If that guy came in the UAE and make a permanent establishment in the UAE, then the withholding tax he already paid, he can deduct from his tax liability. But if he has not going come here in make a permanent establishment, then this withholding tax is not claimed. He cannot claim from the FTA, because this is a withholding tax he paid in the Middle East, because he is earning from the Middle East. Foreign tax relief provided for foreign tax paid on income, also tax in the UAE to prevent double taxation. Because if I have a branch, DELTAKAP Middle East has a branch in Germany, and we are paying tax in Germany, and so that tax income of the Germany is also taxable here. So if we pay tax in Germany, when we are calculating our taxable liability, we can minus that tax we already paid in Germany. So there is the concept of double taxation. If you already one income which is taxed in another jurisdiction, you are not paying that income tax over here as well. And actually, if you are paying more than 9%, you can not pay more over here. If some jurisdiction is rate of tax is less than 9%, then you have to pay some taxes over here for the foreign income. If the tax rate is already 9%, then it's not now payable to over here. It automatically adjusts. Foreign tax credit relief is given after withholding tax credit, because withholding tax will give you a minus. If you are paying more withholding tax, this will give you a refund. But foreign tax credit relief will not give you a refund. because this foreign tax credit you are paid in other jurisdiction, not in UAE. The withholding tax you are paid in UAE, so if you already pay more, you can claim from the FTA. But foreign tax credit relief will not give you a refund. This is a major difference between two. If you are minusing tax credit, you have to be minus first withholding tax, then you can minus foreign tax credit relief. Other jurisdiction means any other jurisdiction, because right now there is no double taxation agreement with the Germany of UAE. They have, I think before it cancelled, I think 3 or 4 years before, German authority cancelled this because they said it's low jurisdiction tax. Before there is no taxable here in the Middle East. Right now there is no foreign tax, but they said you can take the foreign tax credit relief. If you paid in over there, you can claim over here as well. But actually, frankly, this will not give you a tax credit. For example, if you have an income in Germany, you are pay tax over there. I know the German is, I think, minimum 40%, 30%. If you are paying more than 9% over there, that you just only disclose that income over here. That income is not taxable over here. And above payment will not give you a credit. There is an election when you are going to submit your CT return. There is an election for that you are go for exemption your foreign branch, or you want to include your foreign branch income over here. There is a one election. If you said I will include my foreign branch income over here, then you give your foreign branch income detail over here as well in the CT. And at the end, when you calculate your taxable liability, the payment which you made in Germany or Switzerland, you can minus that from here in your tax liability. But actually, it's not taxable over here, because I think in Switzerland is also more than 9% C corporate tax. If there is more than 9%, then there is no liability over here automatically. But if you can disclose that income and reduce your tax liability over here as well, get the foreign tax credit relief from there. But this is juridical person. A natural person cannot give losses to the company.